Hello friends, today we are going to discuss on an important topic, that is double entry system. So in our previous session we have seen that accounting has three parts. One is recording, second is summarizing, and then analysis, right? So today we are going to discuss how do we record the transactions in the accounting books. So let's try to understand what is double entry system. Okay. So as we know that for every credit there should be a corresponding debit, and for every debit there should be a corresponding credit, because there is always a dual impact as it is explained in the accounting concepts. So the transaction of a business can be broadly classified into three categories. That means whatever a business will do transaction, okay, throughout the month, throughout the year, it can be categorized into three categories. What? Transaction relating to persons, okay, so we'll understand who are persons in upcoming slides. Transactions relating to property and assets, transaction relating to expense and income. Okay, so a business should keep separate accounts for each person or firm which it deals, and for properties, assets, expenses, or income. So if you see like the category A, B, C, you need to keep accounts for persons, you need to keep accounts for property and assets, and you need to keep accounts for the expense and income. Now accounts can be classified into two categories: personal and impersonal accounts. Correct. So all the three transactions what we saw here, persons, property and assets, expense and income, this can be classified into two categories: personal and impersonal accounts. So let's see what are the different types of accounts we have and what are the different categories under that. So here if you see, we have personal accounts, then we have impersonal accounts, and under personal there are three categories. One is natural person, second is artificial person, third is representative personal. And under impersonal you have real accounts, tangible and intangible, and nominal. So now let's try to understand what are personal accounts, or what are the categories we have under the personal accounts. So all these categories or accounts we are trying to learn now so that we understand the rule of debit and credit. That is the ultimate aim. So once we understand what are the different accounts we have, then we will discuss about how to define what is debit and what is credit. Okay. So in personal accounts, these are those accounts which records the transaction relating to individuals, firms, institutions, organizations, companies, corporations, banks, and societies. The accounts can be further classified into three categories. Okay. So the first one is natural person's personal account. These accounts record the transaction relating to human being. Correct. So it is very clear. And natural person are people like you and me. Okay. So Mr. Ram's account or Miss Lina's account. So these are all personal account, natural person. Coming to the second part, artificial person's personal account. These accounts record transactions relating to artificial persons. So artificial persons are those who have some existence in the eyes of law. That means it is a legal entity or has a legal existence in a country. Okay. So what can be the example like XYZ Private Limited? Okay. Or you can take any example of any bank, ICICI Bank, HDFC Bank, or a society. So these are all artificial person. Okay. They are not living being, but yes, they are called as artificial person because they have a legal existence in the country. Third is representative personal account. These are accounts which indirectly represent a group of person. Okay. So for example here, salary outstanding to be paid will not be accounted to individual employees account, because today if the company is having 4,000, 5,000 employees, it can't give credit to each employee account or need not create so many accounts in the accounting system. Okay. So in that case, a representative account is created which will represent the total group of persons, and that is called as outstanding, or it can be prepaid. Okay. So in this case it is salaries outstanding, because this is the amount what to be paid to the employees, so you need not give credit to individual employees. Now let's try to understand what is impersonal accounts. Okay. So impersonal accounts can be classified into two categories: real accounts and nominal accounts. So what is real accounts? Real accounts are those accounts which record transactions relating to assets, properties, and possessions. Real accounts may further be classified into two categories. So real accounts majorly deals with the assets of the company, assets of the organization. Okay. So assets can be two types definitely. One is tangible, one is intangible. So let's understand what is tangible real account. So this records transaction relating to tangible things. Tangible things are those which can be seen, touched, felt, measured, like building, plant and machinery, etc. Okay. So a company can have vehicle, that is tangible real account. Inventory, tangible real account. Factory building, tangible real account. So these are all physical assets which the company can identify, touch, or can measure them. Coming to the second part, intangible real account. Intangible real account is the account which relates to intangible things which cannot be touched or seen but can be measured in value, trademark, goodwill, etc. Okay. Now coming to nominal account. Nominal accounts are those accounts which records transaction relating to expense, losses, income, and gain. For example, like rent, salary, insurance. So these are generally your expense and revenue, income, whatever you earn will be part of your nominal accounts. So now let's come to the critical part of double entry system. So we need to understand what are the rules to be followed to understand that what should be debited, what should be credited in case of personal account, in case of real account, in case of nominal account. So we'll start with personal accounts. Personal accounts record transaction relating to persons and firm. This is what we have seen in the previous slide. The person receiving the benefit is given debit. So whoever receives the benefit, okay, will be debited. And the person giving something in return is given credit. So whoever gives to the organization will be credited. Okay. So debit the receiver of benefit and credit the giver. Okay. So let's quickly check one example. Okay. If cash is paid to Lakshman, then he is receiver of cash and his account is debited. Okay. So if I am making payment to Lakshman, okay. So Lakshman account debited to cash account. So here if you see Lakshman is a personal account and it is debited because Lakshman is receiver of the benefit, that is cash. Second, if goods are purchased from Vikas on credit, then he is the giver and his account is credited. Correct? As personal account. So goods will be debited and Vikas will be credited because is a personal account and he is the giver. He is giving goods to the company. Okay. So as a giver, his account will be credited. Now let's try to understand what are the rules applicable for real accounts. Okay. Majorly for assets. So real account record transaction relating to assets. An asset either comes in to the business or in the form of purchase or goes out of the business in the form of sale. Correct? Either asset will come to the company or asset will go out from the company. That is very clear logic. Asset entering the business is given debit. So if any asset is coming to the company or to the organization, then it will be debited. And if the asset is leaving the business, it will be credited. That means if today I purchase a computer, okay, then the computer will be debited because it is coming into the company. Tomorrow when I sell this computer, then the computer will be given credit because it is going out of the organization. So debit what comes in, or indirectly you can say increase in asset value. So wherever there is an increase in asset value, then that asset has to be debited. Other side, what goes out is credit, and if there is any decrease in asset value, then asset has to be given credit. Okay. So let's take an example. When goods are sold for cash, cash account is given debit as cash comes in, and sells the goods account is credited as goods goes out. So cash account debited to goods account. So if you see here, both cash and goods are real accounts in this particular entry, right? Because goods is the inventory, which is a real account, correct? Tangible real account. Cash is also a tangible real account. So goods is going out, hence it is given credit because there is a decrease in asset for the company, or you can say what goes out. On the other side, cash, the asset increases for the company, okay? Or you can say what comes in is debited. So in this case, the entry will be cash account debited to goods account. Now let's try to understand what are the rules for the nominal accounts. So as we have already seen in the previous slide, nominal accounts deal with expense, losses, gain, and income. Correct. So let's see what is the rule for that. Nominal account deals with expense, income, profit, and loss. Expense and loss accounts are debited, and income and gain accounts are credited. So here it is very clear. Any expense, any type of loss will be debited, and any type of income and gain will always be credited. Okay. So debit the expense and loss, credit the income and gains. Okay. So what are the example we can have for this? When rent is paid to landlord, the rent account is debited as it is an expense, and the cash account is a real account which goes out from the company. So it is credited. Correct. So what should be the entry? Rent account debited to cash account. Okay. So in this case, if you see in this entry, there are two parts. One is rent, one is cash. Rent is a nominal account, cash is a real account. Okay. So as nominal account, we need to first question ourselves, rent is a expense or is a income? It is a expense. If it is a expense, then it has to be debited. Second, cash is a real account. So whether it is coming in or it is going out, it is going out, or you can say decrease in asset value. So as it is going out, it has to be credited. Hence the entry will be rent account debited to cash. So now let's take few examples to understand how the journal entry need to be recorded based on the type of accounts. One, purchase of goods amounting to rupees 10,000 from supplier XYZ Limited on credit. Okay. So here goods account debited rupees 10,000 and XYZ Limited account is rupees 10,000. Okay. So if you see in this particular transaction, there are two accounts, correct? One is goods, which is coming in to the company, and another is XYZ Limited, which is a personal account, and he is the giver of goods, correct? We are not paying cash to him, so he is still a vendor to the company to whom the company is going to pay in future, correct? So why goods is debited here? Because goods are real account and it is coming into the company, so it is debited. Okay. On the other side, XYZ is a personal account. Okay. And he is a giver. Hence it is credited. Now, cash paid to XYZ Limited rupees 10,000, because in the first transaction, this was a credit transaction. Okay. Now you are making payment to XYZ Limited. So what should be your entry here? XYZ account debited rupees 10,000 to cash account rupees 10,000. Why this entry is posted like this? Because XYZ is the receiver of cash now, right? In the previous example, he was the giver of goods. Now, in the second example, he is the receiver of the cash. Okay. So as a receiver and as a personal account, it is debited. On the other side, cash, which is a real account, is going out of the business. Okay. What goes out is always credit. So in this entry, XYZ will be debited to cash. Third example, telephone expense paid in cash. That means the company has paid telephone expense of rupees 2,000 rupees in cash. Okay, what should be your entry here? Telephone expense is debited to cash. Okay, so as we have seen before, any type of expense or loss has to be debited because it is a nominal account, correct? And here cash is a real account. Similar to the example number 2, as cash is going out, it has to be credited here, and telephone expense will be debited. Clear? So that's the end of the session. Hope you liked this session, and please share with your friends, like this video, subscribe the channel so that you can get updated about my future presentations. Thank you.